Okay, in this video, I'm just going to go over the FTX scandal about Sam Bankman-Fried. If you want to watch this full interview, then you can check it out. I think it's by the Wall Street Journal. But yeah, we're just going to go over about how much of a liar Sam Bankman-Fried is, and I'm just going to cover some of the stuff in this video of the FTX scandal and I guess how to protect yourself in the future. But let's watch the video. It's just like some parts that I want to point out to the audience and to people that are a little bit confused as to what the whole FTX scandal was. But yeah, pretty much to summarize, this guy here, he lost, I think it was around about $8 billion of consumers' funds and a whole bunch of investors because he's a lying cheat. And we're going to go over like some of the stuff in the video where he practically admits that he was fraudulent. And where he is at the moment is he's living in the Bahamas. He can't travel to the States. If he leaves, he'll probably get arrested. And I mean, it's a cowboy industry, but this guy's definitely lying. But let's watch the video because there's some important parts I'm going to cover here.
Some of the things you would want to have done differently, but I don't want this to be an abstraction for folks because it's a lot of big numbers and often doesn't feel human. One of the letters I got, I want to read to you, Sam, because it's from a gentleman who said that he lost his life savings. And the subject line is, Sam Bankman-Fried stole $2 million from me. It says, Andrew, can you please ask SBF why he decided to steal my life savings and the $10 billion more from customers to give to his hedge fund, Alameda? Can you ask him why his hedge fund was leveraging long all of these S coins? I'm going to keep it polite for the kids. Please ask him if he thinks what happened was fraud. These are the kinds of letters that I've been getting repeatedly over the past several days. What do you tell this man?
Yeah. I mean, I'm deeply sorry about what happened.
No, he's not.
Here's, the long and short of what happened. And I'll start by saying, just to make a distinction here, you look at the U.S. platform, you look at the international platform. The U.S. platform is a U.S. regulated platform with American users. To my knowledge, that's fully solvent. That's fully funded.
It's not. And, they can't get their money out.
I believe that withdrawals could be opened up today, and everyone could be made whole from that. That none of these problems plagued the U.S. platform. Then you look at the international platform.
So I'm going to go through a few parts of this video. It's going to be a relatively quick video. It's only going to be about 15 minutes long. But these are just straight excuses. I mean, he's trying to beat around the bush by making excuses, not owning up to anything quite yet, but we will deep dive it.
For their non-US users. And, I mean, as the letter says, Alameda Research did have a long position. And the international platform, it's a margin trading platform. It's a derivative platform.
BS.
And using that to put on a position. And, what the exchange...
I'm going to skip it in because it's just a load of jargon that he's talking about.
No ability for FTX to be able to liquidate that position and generate everything that was owed from it.
I think the bigger question is where Alameda got the loan from, which is to say that there is a view that this is about commingling of funds. Right. And in that letter that I just read you, this gentleman actually copy and pasted the terms of service for FTX into the email. And I just want to read you this. It says, none of the digital assets in your account are the property of. It says, none of the digital assets in your account are the property of.
He's drinking.
Or shall or may be loaned to FTX Trading. FTX Trading does not represent or treat digital assets in users' accounts as belonging to FTX Trading. So how is it possible that Alameda had this loan of such a large size?
So there is that piece from the terms of service, but there were a number of other parts of the terms is there's a number of other parts of the platform on top of that. There is the borrow lending facility, where users were lending billions of dollars of assets to each other.
Again, so these are just straight excuses. So to summarize what Sam Bankman-Fried did is he took everyone's money in FTX and he gave it to Alameda Research, which was, and I'll skip it to the part of the video where he admits this, but he was living with the guys that started Alameda, and they were all flatting together, so they were flatmate buddies and whatnot, and they were partying, they were drinking, they were on drugs. So this is confirmed. They were like on Adderall and a whole bunch of like weird drugs because these dudes are like all real messed up. They're also super young, like super young dudes. You can see in the body language, like he can't sit still. He keeps looking at the ground. He can't really make too much eye contact. He knows he's guilty. Everything that he's saying is lies. Like, it's not in the terms of service on a centralized exchange to be able to move people's money, especially to an independent body or a private equity fund, which he did that, all under everyone's noses. And then when they started getting into hot water, they cut and they ran with everyone's money and they shut it down. So everyone that had money on FTX, they lost it.
Collateralized by assets on the exchange. You had obviously futures contracts where there are leveraged positions on. Now, of course, all of this, it's meant to be the case that these are positions where FTX could, if it needed to, margin call those positions and close them down in time such that it would cover all of those, all those shorts, all those liabilities. Obviously, that wasn't the case here, and that's a massive failure of oversight, of risk management, and of diffusion of responsibility from myself running FTX.
So he's admitting it.
Let's just make this very straight. Was there commingling of funds? That's what it appears like. It appears like there's been a genuine commingling of funds that are of FTX
keeps looking at the ground
that were not supposed to be commingled with your separate firm.
I didn't knowingly commingle funds. And
bullshit. Again,
one piece of this, you have the margin trading. You have, customers borrowing from each other. Alameda is one of those. I was frankly surprised by how big Alameda's position was, which...
By the way, he's also been caught red-handed. He's been paying off media. I think Joe Rogan also covers this. He was paying off media to put out good reports and pretty much trick investors into investing into FTX. I just want to summarize here. I did not lose any money on FTX. I did not lose any money on Luna. The only cryptos that I believe in is proof of work models that have their own blockchain. So that's like Ergo, Bitcoin. I don't even really own much Ethereum on the basis that it's an infinite supply. So I only buy cryptos that have a limited supply cap. So it's scarce and rare. And then also technology and the foundation backing it, like their own blockchain. The only exchanges that I would hold would be decentralized exchanges where I'd actually put money on that and hold crypto in that exchange, but I don't actually even do that. I've got all my crypto, tied up into cold storage, things like ledger wallets and that type of stuff. I would very strongly advise anyone that's in crypto right now that has money tied up in exchanges or other places that have the keys to actually get your money out. If you're going to invest in crypto, you need to get a ledger and you need to own it. So not your keys, not your crypto. That's really important. If you don't know how to do it, just watch a YouTube video on how to actually secure your own crypto wallet and make sure you move the crypto to that wallet, and you'll be protected against things like this, because I do think that this is potentially the tip of the iceberg in the bear market, where we may have more, exchanges, centralized exchanges start to capitulate potentially, and it might be difficult to get your money out. So yeah, just be real careful. I'd, like I said, only stick to things like UTXO models, blockchains, Bitcoin, and Cardano is okay, but I would also really advise to buy Ergo, stuff like that. I wouldn't touch any of the altcoins that are built on top of projects. Like for an example, I think SHIB is built on top of Ethereum. You might as well just buy Ethereum, the underlying technology and that blockchain. Because if you buy SHIB, it's just built on top of it, and it's like you're literally just buying like fairy dust. It's not a real asset. But that being said, it does offer some type of tangible use cases. But let's go back to the video. I'm just going to cut. We'll hear what Sam's got to say, and then I'm just going to cut to a few parts where he admits to his partnership and his living arrangements with Alameda Research, and then we'll finish off on some criminal charges that he may be facing. So let's continue with the video.
Points to another failure of oversight on my part. And failure to appoint someone to be chiefly
he is solely responsible.
But I wasn't trying to commingle funds.
You don't just move $8 billion.
The Wall Street Journal reported that Carolyn Ellison told Alameda staffers that Alameda used FTX client funds to cover loans that were being recalled because of the Luna-triggered credit crunch. Carolyn says that she, Sam, Gary were aware of this. How do you square that with what you originally said over Twitter, that this was an $8 billion accounting mistake?
So I'll point to two things. And first of all, obviously, I don't know what anyone else is thinking here. You know, I can only talk about it from what I know, from what I knew. And a lot of this is reconstructing it over the last month. I have limited access to data. But you know, what it seems like happened is in the middle of the year.
People, but most of the remaining nexuses, you said, have dropped off.
Yep.
I know the people from Alameda decently well, almost as if you don't know what's happening there. And there isn't like a large amount, you know, of ways remain that we are actively working together. Anything like that. Alameda is a wholly separate
Watch his face.
entity.
He starts laughing.
They're different offices, like different principal offices. We don't have any shared personnel. We're also not the same company. We not all are under the same corporate umbrella or anything like that. And yet it seems like Alameda people were living in the same penthouse where you may very well be right now, all together.
Look at him, he's laughing. It's not funny.
Most of Alameda was
He thinks this is a joke.
There. I don't live there now, but or you know, not there now.
I don't live there now. Pause. I'm not there now. Look how uncomfortable he is. He's shifting positions. He just literally admitted that he was living with these guys. Literally.
Have not lived there for much of the time, but you know.
And then he just changes what he just said. So can you trust what he's saying? Of course you can't. He's literally saying one thing and then saying something else entirely different. Ugh.
I did live with one or two members of Alameda for a little while. And I'll also say that, you know, as I was
like his arms are fucking like
looking at the relationship, and this is a pretty big mistake and oversight of mine. I was viewing it primarily.
He just admitted he was responsible,
because that's what drives our revenue. And so when I was looking at how intertwined are FTX and Alameda, you know, I was looking at, well, what fraction of trading volume, what fraction of liquidity on the platform does Alameda represent? That had fallen off from something like 45% in 2019 to something like 2%
bullshit
this year. But in terms
it's still despite the point, literally he's admitting that he sent money to Alameda and that was against the terms of service, right? That people signed when they started up their accounts, right? And he's taking people's money and he sent it to his boys, like, and they're having a great time on everyone else's money. We're talking billions of dollars. I'm going to skip to the criminal charges part.
But I think the real answer is that's not, it sounds weird to say, but I think the real answer is that's not what I'm focusing on. It's, there's going to be a time and a place for me to sort of think about myself and my own future, but I don't think this is it.
Dude's shaking.
Like, right now, I mean, look, I've had a bad month. This has not been a fun month for me, but that's not what matters here. Like, what matters here is the millions of customers. What matters here is all the stakeholders in FTX.
He doesn't care.
Who who got hurt, and trying to do everything I can to help them out. And as long as that's the case, like I don't think that what happens with me is the important part of that, and I don't think that's what it makes sense for me to be focusing on.
Sam, help me with this. On November 7th, you tweeted and then deleted a tweet that said, quote, FTX has enough to cover all client holdings. We don't invest client assets, even treasuries. Yep. We've been processing all withdrawals and will continue to be, unquote. You then deleted that tweet. And literally just moments ago, you told me it was on November 7th that things took a turn.
Yep.
You're telling the truth?
So things were changing fast. And, when you look at November 6th, I was feeling nervous, but I felt like things were probably going to end up okay. We still had, assets way larger than liabilities, and yeah, there was increasing withdrawal demand, but we were meeting all of it. We were processing all of it, although it was a weekend, so we were a day delayed on a lot of wire transfers and stablecoin creations, and Bitcoin node was overloaded, but
look at his knee, look at his arm, it's so shaking.
8th,
I do recommend you guys to actually watch, it was the New York Times that they did the interview. I highly recommend watching it. He asked a question around the 30-minute mark, if he believes he's going to face criminal charges. The dude's drinking, he's laughing, he thinks this whole thing's a joke. There's a reason he's in the Bahamas, because he knows that if he goes to the States, he's going to probably face criminal charges. So I'm just going to end the video here. I recommend that everyone goes to check this out, and I feel really bad for anyone that lost money in FTX. But like I was saying before, just not your keys, not your crypto. Make sure that if you want to invest in crypto, that you are buying the crypto yourself and you're holding it in a secure way, and not like on a centralized exchange. And you do your research, obviously, because there's so many cryptos out there that actually are centralized, and they're exactly like this guy here, where they're just trying to get your money. So you have to be really, really careful what you decide to buy. All you got to make sure is that you're buying something decentralized, okay? So things like XMR Monero, like that's another fantastic crypto to buy. I think Fire is a pretty good privacy coin. But yeah, always be buying something that actually has an underlying blockchain. My pick would be Bitcoin, obviously, and Ergo. Those are practically the only two cryptos that I pretty much have at the moment, and I've got a little bit of Cardano. But yeah, like, check out the video. I'm just going to end the video on a little bit of technical analysis on some picks that I've made for gold. So this is the gold chart here. You can see that massive high that we had, where it got to over $2,000 per ounce. The reason I'm pitching gold is because I want you guys to have, I guess, like a strategy of like what to do if you're like in crypto, or like looking to, I guess, like where to put money now. The whole FTX scandal washout will affect crypto, I think, for probably the next few months. It's also going to ruin, I think, a lot of investor confidence. So I do expect gold now to have a really, really strong bounce. So I've been watching gold for a while. I've been adding to my positions. Unfortunately, I went through something about a month ago that I was a little bit sleepy on my trades because I went through some personal problems in my life. But that is another story for another day. We've had a triple bottom. So you can see that the price on this bottom trend line, it hit once, came back up, it pretty much had a double top, came back down and it hit it in that exact same spot, bounced back up, and it decided to come down and hit it for a third time. So that is a triple bottom. And then when it came back up to where that original channel was, normally with a reverse triple bottom, you'll be looking for a breakout, which we had. And then now those tops have now flipped into support. If you go back into the initial run up, there's also some support. So I do expect there to be resistance around that $1,800 mark for gold, but with like laser high inflation, and especially with what's been going on with FTX, I'm picking that gold, especially in now December, has a December rally, and it's looking really good. Like anyone looking at this gold chart, or who's big on technical analysis and looking at this chart, would also agree that this chart looks very good to be investing. You've pretty much had a confirmed breakout where this second high has been set. So if we can get above $1,800 an ounce, then that flips into support. We can expect to go on a bit of a rally through December, which I'm picking. So maybe 1880, 1920. So the trade will be, in my opinion, it will be Newmont, sorry. So they're the largest gold mining company in the States, and available to trade on the New York Stock Exchange. So you can see that, you know, when gold had its breakout, the stock price went on an absolute tear, and this was a ascending wedge where eventually the price was going to break down. So when you've got an ascending wedge like this, the price was going to break down, which it did, and then the stock market went through its crazy sort of crash throughout the year. Things were going really bad, and then we had a sort of like a descending sort of like what's this, like a box, like a trading channel, where we had a breakout similar to that other this breakout here. That's what paused the breakout for Newmont, and we've now had a confirmation. So my pick is that if gold goes on its rally, and also remember Newmont is paying, I think, a 4.87% dividend yield at these prices, I expect that we should probably return to like somewhere in the middle of where all this like trading was, which is around the $60 per share mark. So from 48 to $60, I'm not sure on the percentage yield that is, but I think you'll be looking at around a 30 to 40% increase if you wanted to invest into Newmont. But from a longer term outlook, I would say investing into this company, other than something like Bitcoin, is probably a lot more safer and secure. You can always dollar cost average, and also they pay dividends. So that is just a little trading tip that I'm going to give, a little freebie out for anyone that's maybe interested in making some moves. Personally, I've put in $2,000, and I've already been holding quite a large position in some Australian gold mining stocks that I've been adding to. But I'm also pretty keen on Newmont, because I think if you invest before the 7th, which is 2 days away, you will also catch their dividend payout, which will be end of December. So I think they're paying 55 cents per share, so you also get some payout for that if you do invest before the 7th. So yeah, hope you guys enjoyed the video. I'm going to end things there, and make sure you like and subscribe. And yeah, I hope that you guys navigate this bear market well, and maybe learn something through my video that I put out. Have a good one.